Hello traders and investors, welcome back to the Trend Trader channel. In today's video, we are going to be looking at ETFs that you can use to track the stock market. So it doesn't matter your trade experience, whether you are a beginner investor or you're an experienced investor. The sole purpose of this video is to show you some of the ETFs that you can use to track the JSE market and also to track the US market. We're going to be looking at 5 ETFs. 2 of these ETFs you can use to track the JSE market, and 2 of the ETFs you can use to track the US market. And then the 5th ETF is an ETF that you can use to track the US market, but using rands, not using a foreign currency, in this case the US dollar. So by the end of this video, you will know which options you can use to invest locally and offshore, both in rands and in US dollars. So for those people that haven't subscribed, I would like to ask you that you consider subscribing. And if you find value in this video, please make sure that you smash the like button. And as always, we are always open to comments. Make sure that you comment if you have any questions, or if there's anything that was not clear during the video, please feel free to comment. So for the domestic ETFs, or the ETFs that are available on EasyEquities and many of the other local stockbrokers, we will be using ETF SA. As you can see, they say ETF SA is the home of exchange traded funds. But remember, you can always get the information anywhere. This is just one of the many tools that I use to find information. So the information that you're looking for, it falls under the ETFs. There are different products that you can look here under this website, but you're only interested in the ETFs. So I mentioned that you're going to be talking about 2 local ETFs or 2 domestic ETFs and 2 foreign ETFs, and 1 ETF that you can trade. It's a foreign ETF, but you can use the local currency, which is the rand. So as an investor, you have an option to track the general market, as you can see, which is the All Share index, or to track a specific index within the total market. Majority of people, they track the top 40 ETF or the top 40 companies in the JSE. So for this video, we're going to be talking about both the top 40 ETF and the All Share ETF. Remember, it's not just Satrix that offers a top 40 tracking ETFs, but since we are also considerate about the total expense ratio, we're just going to focus on, in this case, we're going to use Satrix top 40 ETF as an example, but a lot of other ETF providers, they do have the top 40 tracking ETF. So like I said, now if you look at the difference between the top 40 ETF and the All Share index, remember the JSE has over 300 companies. So if you invest in the top 40 tracking ETF, you are only getting an exposure to the top 40 companies by market capitalization. The stocks are not arranged by performance, they are arranged by size. The size is calculated by using the share price of the company and the total issued or outstanding shares of that particular company. But due to the smaller size of the JSE entirely, majority of the companies that are in the top 40, they make the bulk of the All Share index. So you will see from time to time that the top 40 and the All Share index, they mirror each other. So meaning that they are almost similar. But remember, the top 40 usually it's big cap companies or large market capitalization companies. So for those people that are interested in small caps and mid caps, they might miss some of those companies because those companies are not represented in the top 40 ETF. Again, these ETFs, they do mirror each other a lot. So if you're buying the index tracking ETF, not necessarily the individual companies, there's not so much that you are going to lose in terms of performance. So looking at the Satrix Top 40 ETF, I already mentioned that the management fee, because it is important to understand how much money we are paying for that ETF. So this one has a total expense ratio of 0.1%. Fees are important when it comes to investing. The Satrix ETF is one of the oldest ETFs, if not the oldest index tracking ETF in South Africa. You can see that it was launched in November 2000. And this ETF, one thing that makes investors to like it, it's because it distributes on a quarterly basis. Okay. So what is distributions? Distributions are something that look like the dividend. So if you're a dividend investor, you will receive dividend from time to time from the companies where you invested in. In this case, what we consider to be dividend is called a distribution. So now it distributes quarterly, meaning that 4 times per year, every 3 months. You can see when the money is paid. Usually when the money is paid into your account does not necessarily coincide with the date of the distribution declaration, simply because the ETF itself has to first finish a quarter, and then they have to consolidate all that information, then come up with the distribution declaration date. And then there are some dates that happens before the distribution is paid. Some of the dates that are there, it includes the ex-dividend date, the record date, and then finally the distribution payment date. If you're not familiar with this date, we will leave a link to a video where we describe all the dates that are associated with dividend or distribution payments. So what you see here, like I said, it tracks most of the companies in the JSE by size, not necessarily by performance. So now we can see that these are the top 10 holdings of the Satrix Top 40 ETF. CFR Richmond recently did a consolidation of 10-1. So if you owned 10 shares of CFR, you will end up owning 1 share. But the share price, it also changed from about 400, let's just say 320 rand per share to about 3,200. So that also represents a 10-fold increase. On paper, nothing changed. It's just that how many shares you have and the value of each share. And then you can see there are a whole lot of other different companies coming from different sectors. What you see here is the sector allocation. This basically shows you how diversified this ETF is. You can see the ETF has exposure to basic materials, consumer discretionary, telecommunications, financials, technology. Even there is real estate, and then there is a bit of cash and money market asset. Remember, we've got a couple of asset classes that are available for investors. This is a market tracking or equities tracking ETF, meaning that it does not invest in a cash and money market assets. That is why there is a small percentage that is in there. If you want an ETF that tracks cash and money market asset, there is one that is coming from New Funds. It's a track ETF. That one tracks the interest rate payment. So this is a nicely diversified ETF at this moment, depending on where the price is, because these fact sheet are outdated. You can see this one is from December 2022. We expect Satrix to update this so that you can see the recent information with regards to that ETF. But most of the things haven't changed, especially the top 10 holdings, because that's what the JSE still looks like. The total expense ratio hasn't changed. The distributions and the distribution frequency, they haven't changed. Now, when you look at the All Share Index, we can see that in terms of the top 10 companies, we still have the same number of companies. But one thing that you can realize here in this case, there is CFR that is about 17% of the total holding. But if you look at the Satrix capped, it is just around just below 12%. The reason for that is because they want to ensure that there is no company that is over 10%. Well, they don't always achieve that, but the goal is to try by all means to ensure that each company at most it is about 10%. Well, we can see that these top two, they are just around 10%, but the ideal scenario is that it is at 10%, not more than 10%, and that is why it is called a capped ETF, because they want to ensure that they cap how much capital is allocated per company. Okay, like I said, these holdings, they do look each other, and then one thing that is different in this case, you see the management fee is shown as 0. The management fee, the projected management fee is 0.25%. So it's either Satrix hasn't started applying this, but it hasn't been, let's see, it was started in November 2021, so a year has passed. So I'm not sure whether they're still comfortable with giving this ETF to investors at a small transaction cost of 0.06%, but the proposed total expense ratio is 0.25%. So someday, if you see that the Satrix capped all share ETF has a total expense ratio of 0.25, you shouldn't be surprised, because that is what they proposed. Then again, you look at the sector allocation, it is similar to what we see there on the top 40 ETF. So these ETFs, you can buy them irrespective of which broker you are using, but if you're using EasyEquities, you can buy them under your tax-free savings account, or you can buy them under your normal South African Rand account using rands, and this will give you exposure to the JSE market. I mentioned that this ETF, they show that they have a similar performance, so not so much changes in these ETFs. So what we know, we're just gonna search for Satrix top 40, because I don't want to use the JSE. Okay, now let us look at the chart of Satrix top 40. I mentioned that the performance is similar to that of Satrix capped. So you can see that over a 5-year period, so going back to about the beginning of 2018, so that should give us an information that represent about 5 years. You can see it was sort of flat, and then there was that breakout that happened around 53 Rand, and then it has been trying to move up, breaking above 70. Currently it is trading at around 74 Rand per ETF. And then we're going to overlay the Satrix capped ETF. You can see here we have the Satrix capped all share, but remember this one only came around November 2021, so we don't have a full information on this ETF that goes back to 5 years. But you can see when the top 40 goes up here, it also goes up. When the top 40 goes down, it also goes down. Top 40 goes up, it goes up with it. You can see this pullback here. There was also a pullback on the all share index. So that is why that, to me, my opinion is that it doesn't matter which one you invest in. If you want exposure to the top 40, you can just go for the top 40. But if you want exposure to the whole market, then you can go for the Satrix capped all share index. And be mindful that it is only Satrix that has the all share index tracking ETF. The other ETF providers, they don't have it. They have the top 40 ETFs, but not the all share capped ETF. So that is something that you should be mindful of. So now moving abroad, same thing, we can look at 2 ETFs. So there are different companies that offer index tracking ETFs in the US. In this case, we're gonna look at 2 companies, the Vanguard, and we're gonna compare it to that State Street, the SPDRs. So the whole point of this is to show you what are the minor differences between these 2 ETF providers. Starting with SPDR, the S&P 500 is normally called an SPY ETF, but both ETFs, they track the top or the S&P 500 index. What differs mostly between these companies or these ETF providers is the gross expense ratio. We can see here the SPDR, it is at 0.01%, the fee that you can expect to pay, and these are priced in US dollars, so you can buy these. If you're using EasyEquities, you can buy them in USD, in your USD account. You cannot buy them in your normal South African Rand account or in your tax-free savings account. So this SPDR or SPY, it has a total expense ratio of 0.8%. 1%. And then if you look at the Vanguard S&P 500, it has an expense ratio of 0.03%. So based on this, the SPY is actually cheaper compared, well, it's 0.0. Okay, it's 0.1 because it's 0.09. So the VOO is actually cheaper than the SPY, but it doesn't matter. It's up to you which one you would prefer to buy between the two. But since the expense ratio of VOO is cheaper than that of SPY, also because they track the same index, we would expect them to have a similar performance in terms of the value or the amount of the ETF over this period of 5 years. So for the purpose of this video, we're going to talk about the Vanguard S&P 500 ETF. You can see that it's an index tracking ETF. For Americans, it's a domestic ETF, but for us South Africans it's a foreign because we are not in America. So for us it's available through our brokers that we're using. It is not in our country. So things such as the market cap does not, or the market price, the price of this ETF, it's about $378. If you look at the SPDR, the price is about $411. So this one, it looks cheaper on paper, but then you should expect that there will be a bit of a difference there. So this one, it tracks the S&P 500, which represent the 500 largest US companies. The goal of the ETF is to track the index return closely, but remember there's always going to be cost. Because of the cost, there's going to be a minor difference between the index itself and the ETF that is tracking that particular index. So when you look at the performance here, the performance is here. You're looking at in terms of a year-to-date performance based on the net asset value. This ETF is up by 8.2%. So we are also of the opinion that the US market is starting, or it is now in a bull market. So we are not surprised to see that the growth is positive. We know that 2022 was difficult for most investors, so there was a bit of challenge there. There was a negative return across the board. So what you see here, the asset class, again, is a domestic for Americans. This VO ETF was established in 2010, and there's a lot of information about that. The minimum investment amount is $1, but that's if you are using the Vanguard platform. If you are using EasyEquities has its own minimum, or other different stock brokers, they have their own minimum investment amount. So now what I want us to look at is the portfolio composition, what it is made up. So even though it tracks the S&P 500, the number of stocks that are there, actually it is tracking 506 companies, whereas the benchmark that it is tracking is composed of 503 companies. And the median market cap of the companies, not of the ETF itself, is about 167 billions, with those earnings growth for those companies. For the people that love a PE ratio, it has a PE ratio of about 21% and about 23% in return on equity. So if you look at the style box, you can see it's a blend of between value and growth. And then because those stocks are ranked by their market capitalization, then you can see it's a blend of value and growth, but based on their large market capitalization companies. Okay, and then we look at how that the diversification of the ETF, where it is invested. You can see it is not sorted in any order, but we can already see that information technology makes about 26% of the ETF, which is followed by healthcare. Then there is financials, then around 10% is consumer discretionary. Then there are other sectors that are below 10%. So we can see it's the same thing compared to the benchmark. There is nothing where the ETF is under or overweight. Then if you look at the companies now, not just the sector where the companies are coming from, but being mindful that majority of the holdings are coming from the IT sector, we can see that there are companies such as Apple, Microsoft, Amazon, basically all the FANG stock, and then Tesla, Berkshire Hathaway, Alphabet, Meta Platform, ExxonMobil, which is is in the energy sector. We saw in the last year that the energy sector did well, even though the US market was in a bear market. So already we can see how this ETF is composed, the list of these companies, and then again we look at the distributions, because we all like to receive something for the investment or for the risk that we are taking in the market. This ETF also distributes quarterly. The value of the distribution is always going to change from time to time, but when we look at this, they have this distribution date. You can see they happen every quarter. Let's look at the payable date. We see that this one was in December 2022, and then the recent one was in 29 March 2023. You know, Americans, the way they write the date, they start with the month, then the day, and the year, and then it pays just an average of about $1.50. One thing that I've learned about the American companies is that the dividend yield is so tiny. I mean, this thing cost around $390, but you only get around $1.50. But some of you guys are dividend investors, you are comfortable with those numbers, and then there's not so much to complain about. So it is something that is similar to this SPDR, but we've already established that this one cost about 0.1%, but it has similar things in terms of companies that they are tracking. This one was established, it was established in 1993, so it came before the VOO. We can see things such as the number of holdings. This one is 503. The VOO has 3 extra stocks because it is 506. And the price earning ratio, it's about 18.9. That one, okay, there is the price earning ratio, it's about 21%, similar to the VOO. A lot of these things are always going to be similar because it tracks the very same things. You look at the companies, the top 10 holdings, we see Apple, Microsoft, Nvidia, Alphabet, Meta, ExxonMobil. It is the same thing. The breakdown of the sector allocation, we see it as about 25% or 26% in IT, followed by healthcare, financials, just as we saw with the VOO ETF. So it's just a matter of a preference where you want to put your money in. Okay, and then now let us look at well, I'm not a financial professional, I'm just a guy that is trying to find information. Let's see, I will just say I'm just browsing, maybe they will allow me to see this information. So this total ETF, we're gonna use it as an equivalence of the Satrix capped all share index, because it also tracks the entire market, not just the top 500 or the top 40 companies. So what we see here in terms of the market price, it is priced a bit less compared to the S&P 500. This one is priced at $205 per ETF. And also we see the net asset value of 205. We see the expense ratio, it's also at 0.03%, same expense ratio as the VOO ETF. So this one, it measures the overall return of the entire stock market. It's not just looking at a specific group of companies. At this moment, when you look at the net asset value year to date return, it's about 7.62%. So it's slightly less compared to the VOO. And this one, it tracks about 3,900 companies. So it's a whole lot of companies here. And it was established in 2001. I almost said 2021. So there is a lot of things that you can see. We are not necessarily looking at the performance. So now in terms of distributions, let's see if they are saying anything. Okay, they are not talking about distributions per se, just bits and pieces of information about the share price. So let us look at the distributions. This one, it's around $200. So the dividend or the distribution that it pays quarterly as well. It's an average of about 80 cents per ETF that you can expect to receive. So overall, all these ETFs, they will be paying you a quarterly distribution if you're interested in investing in all these ETFs. Remember, the Satrix are priced in rands. The Vanguard or the S&P, the SPDR are priced in US dollars. Now, what can you do if you want to invest in an S&P 500 tracking ETF? but using a South African rand, meaning that this is available either on your tax-free savings account or on your normal South African rand account. We've made a video where we're looking at different S&P 500 ETFs that you can buy in the JSE. We spoke about the Sygnia S&P 500. We also spoke about the cautious S&P 500. We mentioned that both of them, they make distributions. Satrix and Vanguard, they do have S&P 500 ETFs, but those ETFs, they don't distribute. So that is why I'm bringing these two up, because majority of our viewers and subscribers are interested in ETFs that will pay them money from time to time. But for the purpose of this video, we are going to focus on the Sygnia Satrix. Both of them, they distributed different dates. You can see this one distributes in March and September, whereas the Sygnia distributes in December and June. It does a semi-annual distributions, and also the cautious, it does a semi-annual distribution. Right, so now looking at the Sygnia S&P 500, we can see where the money is invested in terms of sector allocation. You can see it's about 25.6% in IT, then healthcare, financials, and then the other sectors that are below 10%. So you see consumer staples is about 7.2%. So everything that is collectively classified as other is just below 7.2%. We can see the performance coming back from all the way since inception, which was October 2017. We can see that the net asset value has been growing up nicely there. And then we can see in terms of the top 10 holdings, it also has companies such as Apple, Microsoft, Amazon, Alphabet, Johnson & Johnson, ExxonMobil. So it is a nice spread. You can already see in terms of sector allocation. So now we want to compare the S&P 500. So the S&P 500 is SPX. This is just the S&P 500 as it is over a 5-year period. Again, you can see there were periods where they were in a nice bull market, and then 2022's bear market, and then at this moment it seems like there's a sign of potential recovery. So we want to compare that to the VOO, which is the S&P 500, and also we want to compare it to the SPY, which is the SPDR S&P 500. So we can already see that you can't even see the information of the other things. That is because it shows that they track that nicely, but I will change the type so to a line so that you can see. Then you can see that they follow each other nicely. So based on this, it doesn't matter whether you invest in the VOO and the SPY. The only difference in this case is the value of each ETF and also the total expense ratio of each ETF. But in terms of price, then it shows that it is moving up nicely. What would be interesting is to see how the Sygnia S&P 500 performs compared to this. So it might not be a fair comparison, but I just want to see how it performs. And as we can see, the S&P 500 in terms percentage wise, the S&P 500 the Sygnia S&P 500 tracking ETFs, each seem to outperform, but remember the Sygnia S&P 500 is priced in rand, everything else is priced in US dollars. So in terms of foreign currency conversion, it is not a fair comparison. For a fair comparison, we need to compare the Sygnia S&P 500 and then compare it to any other ETF that tracks the S&P 500. So I will just remove everything else. Here we see the performance of the Sygnia S&P 500 as it is. Then maybe we can compare it to the cautious S&P 500 ETF, and then we can start to draw some meaningful results. You can see also these two ETFs, even though they have different distribution frequencies, different total expense ratio, but they do mirror each other nicely. So it doesn't matter whether you buy the Sygnia ETF or you buy the cautious ETF, because at the end of the day, in terms of performance, they perform the same. So now lastly, what I would like to compare is to compare the Sygnia S&P 500 and then compare it to the Satrix Top 40 ETF. Remember, one tracks 40 companies, one tracks 500 companies. Some of these companies are in South Africa, some of these companies are in the US. So we can see, because both of them are priced in rands, we can see that the Satrix Top 40 ETF, it underperforms the Sygnia S&P 500. If you have invested since January 2018, you will see that your Satrix Top 40 would have grown by about 43%. So in this case, we are not looking at total return. Total return includes distributions. Here we are just looking at the price appreciation. It excludes distributions. So in terms of price performance, and it is relative to Satrix, to Sygnia S&P 500. So we can see that the Satrix Top 40 is just above 43%. And then the Sygnia S&P 500 is up by 106%. So it's up to you. But the purpose of this video is not to say that one is better than the other. It's to just show you that if you want to look for a domestic ETF, you can use a Satrix. If you want to use a foreign ETF that is priced in rand, you can use Sygnia or Cautious. It's not a fair comparison because they track two different markets. So I think that based on this video, you can then appreciate that there are ways to invest locally and offshore using index tracking ETFs that are low cost, passively managed, and they give you quarterly distributions. You can buy these ETFs whether you are using the South African rand or you are using the US dollars. You can also track the foreign ETFs using the local currency. So that's it for today. That is all that I wanted to share with you. Once again, I would like to ask those who haven't subscribed to please consider subscribing. And if you did find value in this video, please make sure that you smash that like button. If you have any comments or suggestions, please leave them in the comment section. We will see you in the next video.